Today, my administration took a major step to reclassify marijuana from a Schedule I drug to a Schedule III drug.
The cannabis industry is changing quickly. Last week, the Biden administration announced that it would move swiftly to reclassify marijuana from a Schedule I to a Schedule III drug. And this is a big deal. Schedule I drugs are classified by the DEA as drugs with no currently accepted medical use and a high potential for abuse, whereas Schedule III drugs are classified as moderate to low potential for physical and physiological dependence. If you've been an investor for a few years now, you probably remember, as I do, the cannabis industry being super hot a couple years ago, like around the 2018-2019 time period. And the results so far have been really disappointing. The largest cannabis ETF, Advisor Shares US Cannabis, which holds positions in Green Thumb, Curaleaf, and other smaller US cannabis companies, is down 66% from its inception, although it is up 39% from 1 year ago, due to speculation that marijuana would be reclassified. And so, in this video, we'll examine whether or not the Biden administration's new stance on cannabis will be the nitrous this section needs to become a more solid industry, like big tobacco or big alcohol. Let's start off with where we are today. The global legal cannabis market was valued at $21 billion in 2023, and it's projected to grow at 25.7% from 2024 to 2030. To provide some context into that number, the research firm Straits Research values the global alcohol beverage market at $1.6 trillion in 2023, with an expected growth rate of 3.15%. So legal weed is currently 1.3% of the total market capitalization of alcohol. If you think that weed has the possibility to dethrone alcohol by market cap, this implies one heck of an upside. Even if it got a quarter of alcohol's market cap, that's still a tremendous upside. The industry as a whole would be a 25-bagger. So there's really no question about it. Cannabis is a growing industry, and I'll be honest, it's an assumption of mine that it's not really a matter of if weed will become legal, it's more of a question of when it'll become legal. But if you think the alcohol industry has a lot of regulation behind it, where things stand right now, the legal cannabis industry makes the alcohol industry look like it's treated laissez-faire. In the alcohol industry, it's pretty common to hear industry insiders say, it's easy to make alcohol, it's difficult to sell it. The way things sit today, this is even harder with weed.
From tracking to packaging, the laws are different in every state.
There's a lot of red tape that just doesn't make sense.
Licenses to start a farm can cost up to $80,000 alone.
The regulations are really part of what layers on those costs.
If marijuana companies can get it right, there's a lot of opportunity for success.
Federal prohibition and the Schedule I classification has made banking inside the industry virtually impossible. And Section 280E of the tax code make cannabis companies unable to claim virtually any tax expense, which drastically hurts their profitability. And it's illegal to ship weed from state to state. So it's a regulatory nightmare. But still, there could be some brands that are breaking out from the pack right now that could see tremendous upside in the future. And so in this video, we'll take a look at the 5 largest US cannabis companies, and then we'll take a look at the 5 largest Canadian cannabis companies. And the reason why we're separating it is because in Canada, weed is fully legal. And so the situation in Canada isn't as much of a regulatory nightmare. Okay, let's look at the current players. I always like to look at US companies first. And if we look at the top 5 largest US cannabis companies, we have Curaleaf, IIPR, Green Thumb Industries, Verano Holdings, and Glass House Brands. And as I was doing my research for this video, I found a big old problem with 4 out of the 5 of those companies. Out of those 5 largest cannabis companies, only one of them is listed on the New York Stock Exchange or the NASDAQ. And the other 4 trade on the OTC or over-the-counter markets. If you're not familiar with the OTC market, it's where stocks that aren't traded on a major exchange are listed. They have less transparency and less regulation than the major markets, which means they can sometimes be subject to misreporting and at worst fraud. Also, they typically have a lot less liquidity than the other major exchanges, and so they're more prone to large swings in price. The OTC markets is where penny stocks live, or pink sheets. And if you've seen The Wolf of Wall Street, then you know exactly how individual investors usually make out with penny stocks.
Come on, who buys this crap?
Well, I mean, honestly, mostly schmucks. Postmen, there's always postmen.
Right.
Plumbers, they see our ads in the back of Hustler and Popular Mechanics, and our ads actually say they can get rich quick.
As a rule of thumb, I recommend staying away from the OTC markets. However, it is where ADRs are traded, which can be helpful and I have bought before, but that is a separate talk show. Anyway, the only company that actually trades on the New York Stock Exchange or the NASDAQ out of those 5 is IIPR. And here's how they're able to get around it. IIPR is not your typical cannabis grower. It's actually a real estate investment trust, or REIT. REITs are basically real estate stocks. They usually focus on income-producing real estate and are required to distribute at least 90% of their taxable income to shareholders in the form of a dividend. REITs are pretty cool. I'll be honest, before I started researching this sector, I never really thought to look at the cannabis industry from the real estate side. This bypasses much of the industry regulation because they don't actually handle the product. And so if you've been following this channel for a while, you know exactly where we're going to go next. You can't really start a discussion of a company until you understand their business model. And to understand their business model, we get it right from the source. We head to their annual report, and we head to Item 1, Section 1, Business. And once we pull that up, we can see that they are an internally managed REIT focused on the acquisition, ownership, and management of specialized industrial properties leased to experienced state-licensed operators for their regulated cannabis facilities. And that's a pretty cool business model. They basically lease out the greenhouses and other industrial spaces you would need for the cannabis industry. And as the law is written right now, you can't move cannabis across state lines. So that means you have to create a lot of greenhouses to support a multitude of environments so that you can grow the product. And this could become a moat if you think about it. If this REIT can become the railroad system for the cannabis industry, that would be a toll moat, which would be a pretty cool company. With how many properties they currently own, I don't know if that's necessarily possible. And so before I'd even think about taking a position in this company, I would need to figure out what their post-legalization model would look like, since there could be more centralized distribution if the product was allowed to move between states. And I think that network wouldn't be owned by a REIT. I think it would probably be owned by Big Weed or Big Tobacco. But what do you think about this company? Let us know in the comment section below, or head over to our Discord where we're having live conversations about it now. All right, let's move up north to our Canadian neighbors. As the industry stands today, here are the top 5 largest Canadian cannabis companies, which are actually surprisingly all listed on the NASDAQ or the New York Stock Exchange due to weed being legal throughout Canada. The largest is Tilray, followed up by Cronos, and in third place we have Canopy, and fourth place Sundial, and the 5th largest Canadian cannabis company is a company called TerraScend. All right, let's start with Tilray, the largest, which also recently acquired the 5th largest brewery as part of its brands. Then we have Cronos, and if we go to the company page, we can see they have flat revenue, and inside their own company page, undifferentiated brands. Then we have Canopy, which has a horrible growth story, and their financial statements are all over the place. And the same suboptimal financial health exists for Sundial and TerraScend. So out of all these companies, the only company that somewhat sticks out to me as somewhat viable is Tilray. But man, these numbers are not great and show that this is a very, very competitive industry. Net income is going in the wrong direction. Revenue is basically flat between a year. But honestly, the balance sheet wasn't as bad as I thought it'd be. And I did speed that up. I did do a good bit of research before I just ruled out those other 4. But I think that Tilray is pretty decidedly my favorite. Yet I am pretty sketched out by their financial numbers. So let's go into their business model to see if there's something else here. In their annual report, they say that they have 4 reportable segments: medical cannabis, adult use cannabis, beverage alcohol, and wellness. And if we scroll down in their annual report, none of these segments are really growing. The beverage alcohol business is slightly, but that's not why we're buying this company. And the growth is inorganic because it's due to M&A. So yeah, I'm not seeing anything here. All right, so my final thoughts on the industry today. After looking at each of those companies, I'm really not pleased with the direction that any of them are heading. I think that ultimately the winner of the weed wars is yet to be determined. And I think that it's going to be the company that creates a breakout brand. I am waiting for the Coca-Cola of cannabis to emerge. The only brand I've somewhat heard of so far that even comes close to Coca-Cola is a private company called Cookies. Founded by the rapper Burner, he's on a mission to create the most globally recognized cannabis company. I discovered this company from listening to an episode of The Daily from the New York Times, and I highly recommend it. We'll be sure to link it in our description. I think that this entrepreneur has exactly the right stuff to make a differentiated brand. The branding's basically combining the streetwear aesthetics with cannabis. And in that episode of The Daily, it talked about how Burner, who's not a huge rapper, would be opening up for big names like Snoop Dogg or other rappers, and he would have a Cookies logo right behind him. That's the kind of hustle we like to see in our entrepreneurs. And then after his set was over, he would hand out free samples to the crowd. So this is the type of entrepreneur I really like to see in my companies. But unfortunately, that company isn't public. And I don't see them becoming public until prohibition's over. And so all in all, for now, there's just too much risk, which is the same thing as uncertainty, in this industry. That's all for this episode. If you enjoyed it, please consider sharing it with a friend. We're on a mission to empower individual investors in order to tangibly reduce the wealth gap and restore stakeholder capitalism. And getting our message out there would seriously help us make our mission a reality. We'll see you next time.